Good afternoon and welcome to the Thursday, June 4th meeting of the City of Charlotte Housing Community Recovery Task Force. My name is Malcolm Graham, a member of the Charlotte City Council representing District 2 and the coordinator of the task force. And I'd like to welcome the viewing public and task force members for today's meeting. Just as a reminder, the Housing Task Force objectives are to anticipate and plan for Charlotte post-recovery challenges given the economic uncertainties in our city's future, to listen to the community regarding the challenges people are facing as they navigate a changing working and living environment, develop recommendations for how the City of Charlotte, specifically city government, can pivot to support changes needed as a result of COVID-19, and to provide our residents with a long-term vision for a healthy and stable economic and civic environment. Today is also the memorial service for George Floyd. George was an African-American male that was killed by police in our country. George Floyd was known to his friends as Big Floyd. He grew up in Houston, Texas in the 3rd Ward County homes. He was an all-around athlete growing up. He was a starting tight end for the Yates High School football team. And in 1992, they went on to win the state championship. He was known throughout his community as a peacemaker, a minister, a giver of good advice. He was a father, a brother. He moved to Minneapolis because he loved his family and he wanted to provide a better opportunity for them. Those details are important because we need to know who George Floyd really is, know how he lived versus how he died. Racism is nothing new. The wrongful killing of African Americans, police brutality is nothing new. Over the past few days, in every corner of our country, even here in Charlotte, members of our community has engaged in peaceful protests. We've also seen some destruction, but peaceful protest is what we want. I've been thinking about what my sister would have said if she was here. Cynthia would have said, keep the faith and do the work, and with that, we'll get to work. Thanks, everyone, and we'll have the roll call from our members of the task force. Again, my name is Malcolm Graham, member of Charlotte City Council and coordinator of the task force.
Good afternoon, Larkin Eggleston, Charlotte City Council, District 1.
Renee Johnson, Charlotte City Council, District 4. And thank you, Mr. Graham, for that beautiful tribute.
Braxton Winston, City Council member at large.
Lee Cochran, Laurel Street.
Kathy Cummings, Bank of America.
Brett Dotson with the Charlotte-Mecklenburg Housing Partnership.
Good afternoon, Kim Graham with the Greater Charlotte Apartment Association.
Hello, this is Anthony Lindsay with the North Carolina Real Estate Commission and Caldwell Banker.
Good afternoon, this is Deronda Metz. I'm with the Salvation Army representing Charlotte-Mecklenburg Continuum of Care for those that are homeless in our community.
Good afternoon, Connie Staudinger representing Horizon Development Properties and Enlivian.
And we'll have our introduction from our staff.
Good afternoon, Pamela Weidman, Director of the City's Housing and Neighborhood Services Department.
Okay, well, we will follow the agenda as is outlined. We have some very special guests with us as well that will be introduced by our lead teams. And first, we will turn the agenda over to Lee Cochran and Fred Dotson regarding the final recommendations for Workforce Plan Task 1. So Lee, Fred, welcome.
Thank you very much. Since my video went out last time and Fred had to do all the talking, I'm gonna try to take the lead this time. Appreciate everybody's time and all the comments we've gotten and feedback. We will keep this very short because I know there's a lot on the agenda. We last week went through these recommendations in detail. We asked for feedback. I want to thank Mr. Lindsley, Anthony, for some very detailed feedback he gave us yesterday. We didn't get a lot of other feedback, so we felt pretty good that a lot of questions, we had kind of incorporated a lot of feedback from the community into these. So these are very similar to what you saw last week, so I'm not going to go through them. This is really more of a reminder, but also based on some of the comments and questions from Anthony, I'd like to clarify a few things because I think that was important. So this will be hopefully very short. So I'll just jump right in. So the next slide. Just a couple of, I won't read these, but just these were some of our background, our kind of what we thought was some foundational principles for what we were doing that informed our recommendations. But I don't think we need to go through these principles backgrounds, but these are the same as what we mentioned last week. So I think we can go to the next slide. In terms of our actual recommendations around the $50 million in new 2020 Housing Trust Fund funds, if they pass in November, to remind you, we had three major categories we felt these funds would be used for, and how we think initially the fund should be allocated. Again, reminding you that we believe the allocations can be adjusted at each RFP round based on the responses. But it was new construction of affordable rental housing, including supportive housing, new construction of affordable for sale housing, and rehabilitation and preservation of affordable rental housing, including NOAAs and supportive housing. Again, the recommendations were to issue RFPs twice a year. We thought that was important because as the city council is making, as city staff is making recommendations and city council is making decisions about funding, we think it's good that they see projects together next to each other so they can compare and contrast. If everything was on a rolling basis, you wouldn't be able to kind of see projects side by side to see which one's giving you the best bang for the buck. So we do believe in the twice a year. The only exception we made for that was for NOAAs. We do think because those can come on the market and very quickly go off the market and be snatched up, that you do need to at least look at NOAAs on a rolling basis. For sale, we got some comments around how do you do for sale. One of the flexibilities we think is important is that if a developer is doing a for sale project, it does not have to be a specific subdivision. It doesn't have to be one project. They could come and make a request as part of the RFP to say, we would like to do 50 houses over the next 12 months, and we're going to hit certain AMI targets, and we are requesting Housing Trust Fund to do that. But then they could do those on a scattered basis or within one subdivision, kind of whichever. We want to give some flexibility, but then at least you can look at that request in relation to the other requests you get. So that was the reason we have the for sale in with the twice a year rolling. We think if there were developers that wanted to do one-off houses, maybe one house or two houses at a time, we're not sure that the trust fund's the best use for that. There are other funds such as CDBG and home funds that could be used for more one and two house type projects. And I think, yeah, so those were the kind of the three major categories: the twice a year RFP, rolling RFP for NOAA. I think next slide. Our specific recommendations, if you remember, for the different types of housing, for affordable rental housing, both new construction and rehabilitation, we think it's important to continue to target at least 20% of the units at 35% at AMI, but we've added flexibility around how much trust fund goes to a project depending on its average AMI, so that there's an incentive for folks to develop housing at 50% of AMI, which right now is being missed because there isn't an incentive to do 50 instead of 60% AMI. So we want that. And then we want that subsidy cap per unit. We specifically didn't say exactly what we think that should be. I think Mr. Anthony actually had a really good point. We think these are broad-based recommendations that staff is going to have to put some numbers around, getting consultation from folks. So what the actual subsidy level per unit should be really needs to be determined each time they do the RFP based on market conditions. But at a high level, we think you should be able to get more money if you are in opportunity areas. One of the suggestions Mr. Lindsay had, which was great, which was not really base it on district, but use more of a data-driven methodology, census tracts, opportunity areas. But if you're in an area that is high opportunity, low poverty, high levels of amenities, that should be able to get more money from the city. That hopefully will mean that we'll get more projects in South Charlotte in District 6 and 7. But we wouldn't use the districts necessarily as the metric. On the for sale housing side, we thought it was just like the for rent. We pushed developers with the Housing Trust Fund to push to the lowest AMI possible. So that's why we have AMIs at 30%. We think that's also important at for sale housing. So we think that it's important that if someone's coming for trust fund, that they be serving households below 60% AMI in their for sale housing. We know Habitat has been able to do this, and others have been able to do for sale housing at that AMI level. It doesn't mean all of it. We certainly would like to see some housing at 80% AMI, but we think there needs to be some level of affordability at those lower AMI levels in order to be eligible for trust fund. I want to make one note about land acquisition because we did not we recommended not using Housing Trust Fund for acquiring NOAAs as an acquisition fund, because we feel like that is more of a short-term funding need that we address a little bit later through CDFIs. But if you're going for acquisition for land for long-term affordable for sale, such as a community land trust, that by nature is long-term funding. That is money you need to buy land and hold for a very long time, and perhaps perpetually. That is a better use of the Housing Trust Fund because it is a long-term investment. So that was kind of the distinction we made. I think next slide. And then I think this is the last one because we kind of summarized them, was just a reminder that for 2018, we think that it's important not to go right out and do a second round of 2018 for the remaining funds from the 2018 Housing Trust Fund. We think it's in the next 2 to 3 months, we're going to kind of know what the effects are of COVID-19 on the developer market, on the development market, and we'll know if the federal and state have taken any steps. So this is kind of a delay of 2 or 3 months. And to see what happens and then make a decision on whether to put out an RFP for those remaining funds. And then the last set of recommendations were really around other things, non-housing trust fund. Those included additional benefits. One great idea that Anthony had was, in addition to these 3 benefits, certainly the existing density bonus that is already in the zoning code would be another thing that would make sense to add to this as an additional benefit, a density bonus if you go for Housing Trust Fund, as a way to, again, kind of stretch those Housing Trust Fund dollars. And then the continue to use city-owned land so that we can be a model to the county and CMS. And then some of the advocacy we want to make at the federal and state level. So I know I went really fast, but I didn't really want to repeat everything that you heard last week. But I think I appreciate Anthony's great comments. I think one of the overall that's most important is the idea that we can continue to give feedback to staff as they turn these broader recommendations into actual policies and RFPs. So I think that's important that we continue to do that. But I'll open it up. I mean, that's the end of our presentation, and I'll turn it back to Councilmember Graham.
Thank you, Lee, for that presentation. As we said last meeting, everyone had an opportunity to review the recommendations from our last meeting. We gave it another weekend for those to further do a further deep dive into the recommendations and generate additional questions. We took those additional questions into consideration. I think they were amended somewhat in the report that Lee just gave. So I'll just open up the floor for any questions or additional comments before I ask for a motion to officially accept the report and then forward it to the Charlotte City Council. Any questions? Mr. Winston?
I just will say there seems to be a lot of good stuff in here for City Council as a whole to consider, especially the data-driven approach that might result in different investments in different parts of town. Very compelling and very interesting. And I agree about the hold of Housing Trust Fund money for right now. So look forward to discussing this with my colleagues.
Thank you, Mr. Winston. Mr. Lindsay?
Thanks, Councilman Graham. I really appreciate the work that Lee and Fred have done to bring these recommendations forward, and I appreciate the consideration given to my questions and comments. There are a couple of things that I do feel strongly about that I feel like I need to express, and that is first the idea that the rental fund and the for sale fund need to be tied together for RFP processes. I really feel strongly that we need to kind of take a deep look at that and understand whether or not there is sufficient value to restraining the availability of funds that could be put in place for the for sale activities. So I hope that we could still look more closely at that particular item and not relegate it to twice a year. The other piece that I would like to kind of bring up is I think that the land, the current policies that we have for city available land, it would be great if we could take another look at how that the land is offered and advertised to the public as being available. Currently, that policy does not stipulate any sort of method for how the public would be notified about the availability of that land. I know we do have a surplus land process, but I don't know that it's widely understood. So if we could perhaps just kind of take a look at that as well. And then thirdly, I think that the idea of coordination between our housing trust fund and the LISC dollars is very important. We talked about it earlier on in our work, and we did not have an opportunity here yet to kind of delve into that in any detail to explore what we should be doing and how we might be doing it in order to facilitate the process for developers of being able to apply to both funds, being able to potentially expedite the process, just make it a little bit more transparent for the applicants. And if there's some way we can smooth that off, I think that would also be good. So those three things were the only things that I feel strongly that we need to continue working on and looking at. Clearly, I think Lee and Fred are correct in terms of staff's going to have to flesh out a number of these things and get down into some details. And I'm sure council will probably be asking some more detailed questions around that as well. So thanks very much for the work they've done, and I appreciate the opportunity.
Councilman Elgerson.
Thank you, Mr. Graham. Similar to Mr. Winston's point, I appreciate that we are being more methodical than just to use arbitrary markers like council districts, because I think people just think of District 6 as Ballantyne, District 7 is Ballantyne, and District 6 is South Park. They are obviously much bigger than that, and not everywhere in those districts is as high opportunity as certain parts of them are, and vice versa. There are parts of the other districts that are high opportunity that people might not realize. So using census tracts and using a more data-informed approach, arbitrarily looking to put in certain districts, which are always subject to change anyway, geographically, I think is the right approach. So I like the plan overall and appreciated that change.
Okay, any additional questions, comments? Can I get a motion to accept the report and to forward it to the Charlotte City Council for consideration?
Motion to approve.
Second.
It's been moved and properly second. All those in favor, and we'll do a roll call so we can get it on the record. Malcolm Graham votes aye. Larkin?
Yes.
Renee?
Aye.
Braxton?
Aye.
Lee?
Yes.
Kathy?
Aye.
Fred?
Aye.
Kim?
Aye.
Anthony?
Aye.
Deronda?
Aye.
And Connie?
Yes.
That passes, and that report will be forwarded to the Charlotte City Council for consideration. Fred, Lee, thank you very much. You've done a very good job, and we really appreciate the leadership. Our next agenda item is Work Plan Task Force 2, which is financial assistance. They've been working extremely hard as well. I want to thank Kathy and Deronda and Connie for all the work they've done over the last week and a half, and they stand ready to bring some guest speakers before us. And so I will invite Kathy to introduce the topic and let us know where we'll be going over the next 10, 20, 30 minutes. Welcome.
Councilman Graham, and thank you also for delivering your heartfelt and very personal opening. I'd like to thank Connie. She has reached out and invited Victor Augusta with Bellwether Enterprise to provide insight from the banking perspective. And Deronda also secured Tara Peel with Social Serve and Catherine Furman Sellers with United Way of Carolina to discuss the continuum of care and impact to hotel rental space. This is in addition to the work that's currently going around with relief to the COVID-19 emergency funds that are in place. So as such, one of the things that we are recommending is that Task 2C, create a rent relief working group, be removed from the task list, and we would defer this work to the already existing work group that is leading the COVID-19 response fund. And this would be the United Way, City of Charlotte, Foundation for the Carolinas, and Charlotte-Mecklenburg Partnership. And we would defer the work that's currently going on to that particular group. In addition, I do think that Mr. Lindsay brought up a great point, and unfortunately, Ralphine Caldwell wasn't available to come speak earlier, but she has agreed to come back next week on June 11th and answer any questions that we might have around the Housing Trust Fund and the CHO funds that are available for the city to use. In addition to that, next week we'll hear from Matt Martin with the Federal Reserve, who's going to provide an economic outlook on Charlotte, both short-term and long-term, as a result of the COVID-19 pandemic.
I'm sorry, Kathy. Can we ask everybody to mute? Because it's just disrupting the quality of sound and making it harder to practice. So if you're not Kathy, please mute your feed.
Thank you, Mr. Winston. So Matt Martin's going to speak about the short-term and long-term. So if you have specific questions for Matt,
he is very familiar with the Charlotte area and what we're doing here. He's going to mostly speak on multifamily. It was hard to find somebody that could travel in both worlds of single family and multifamily. He's going to try and help you all to understand what the banks are doing and helping to do in order to prevent foreclosure of the properties, which is in the 2A task on our list. And so I'm going to turn it over to Vic now to talk about what the banks are doing.
Thank you, Connie. Can you folks hear me?
Loud and clear.
Yes, we can hear you, Victor. Thank you.
All right, terrific. Thank you. Well, thank you for inviting me to your task force today. I'll give you a little context of who we are. Bellwether Enterprise Real Estate Capital is a commercial mortgage company. We lend on all commercial assets, but I work on the affordable housing team. That is my expertise. Last year, we originated and closed about $8 billion in commercial mortgages. $1 billion of that was for affordable housing. So it's a significant part of our business. What makes us unique is that our parent company is Enterprise Community Partners, one of the largest nonprofit housing advocacy groups in the country. And that is how I'm going to basically set up my remarks today, is how what we call the Big E, the big enterprise, how we are addressing COVID-19. And I want to split it in really to two areas. One being what we're doing now for our existing clients in the affordable housing industry, and what we're pushing for in the future. So, in terms of what we're doing now, most of our mortgages for affordable housing are coming through Fannie Mae, Freddie Mac, or FHA. They're basically guaranteeing those mortgages. And those mortgages are then sold off in the secondary market. But so each of those agencies have responded to COVID-19, and this is all worked out through the CARES Act by basically allowing owners of multifamily properties to forbear their mortgage payments. in response to folks just not being able to pay their rent. And the interesting thing that we have found so far is that we've had a number of owners come to us and asked us for forbearance agreements. They have not, most of them have not executed them yet. Most of them are fortunately using reserves. I think also the federal response has helped in terms of, the unemployment funds that have been available the last couple of months, I think has helped, but people are generally paying rent. We don't think that is going to last as the unemployment benefits come down and the COVID-19 response comes down. There's going to be more issues down the road. So right now, what we're doing is working with our borrowers in educating them on the forbearance process, helping them through that process in anticipation of them using it. The other thing we're doing is more on the policy side, and that's where our enterprise community partners group comes into play. We have a very strong policy team in Washington, D.C., and they have been working with legislators on the last few COVID-19 legislation. And they've been really pushing for a couple of things, and one of them being pushing for more housing assistance. And our view is that you can push the housing assistance, rental assistance, to the tenants to keep the flow of funds going to the property owners. That is the best solution to address this issue going forward. We need to offer relief, obviously, to tenants that can't pay because of COVID-19. But we also need to make sure that the owners of these affordable properties have the funds to pay their staff, to pay real estate taxes, to pay utilities, et cetera. So, we've been pushing that on the federal level. We've been pushing for home funds to be used for that purpose. On a local level, we are also working with cities and states across the country to implement rental subsidy programs out of funds that they are receiving through COVID-19 or other sources. So we have an advisory group that is working with cities and states, et cetera, to develop those programs. So that's what we're doing right now to help our current partners. Enterprise also created a program to help existing nonprofit partners work with their constituents. Could be home ownership. It could be their rental community. But we're offering grants and technical assistance to our nonprofit partners throughout the country. So that is another way that we are trying to help. Now, for the future, we realize that developing and preserving affordable housing going forward is going to be very difficult in the current environment. It feels many ways like the last recession, where the federal government had to come in to support the tax credit, low-income housing tax credit market. We are suffering with both by seeing our 4% tax credit rate go down, which generates less tax credits for a deal to get developed. And we're also seeing the erosion of equity pricing. So you're seeing between those two events, we're starting to see larger and larger gaps for very important affordable housing deals in the future. So we really are pushing for several policies on the federal level, one being making the 4% permanent. You're probably well aware of that. We're pushing for additional tax credits, increase the amount of tax credits the states are getting by 50%. We are also pushing for additional funding to make to home program for housing assistance, et cetera. So, so that gives you a general idea of how we're reacting to the COVID-19. We definitely think there is a need, until the federal response comes into play, for local partners to help perhaps fill the gap. maybe using some of the resources they do have into rental assistance would be one way that we're really pushing. So with that, I would open up to any questions.
Thank you for that presentation. I recognize Kathy.
So thank you, Victor, for that presentation. I do want to point out, for those that might not be aware, that if you receive mortgage assistance through FHFA, which administers or has oversight for Fannie and Freddie, as well as FHA, that if you do as a mortgage holder receive benefit from the CARES Act and you have a tenant, that tenant has protection. Now, they might not always know that. So should you hear tenants talking about this, there is a way to find out if your landlord received protections under the CARES Act. So just for an awareness perspective. And I will say that our task group has had discussions much like what you're talking about. I think, where we see the biggest concern, because there was a federal response, the financial institutions have responded rapidly to help people defer their mortgages. Where we feel that there might be a void is in the rental space, especially for low-income families, but also to the mom and pop landlords that might be out there, and perhaps they don't have a mortgage, but this is their source of income. So, I think that, as we start looking at this, and we put a survey out that we referenced, it's to really gain that insight and that information back from the community. But do you have any, from your perspective, any insight as to the impact on those non-mortgage holder landlords that might be out there?
Well, I don't have any data on that, but you make a very good point. That is actually a majority of when you look at the numbers, there's a significant amount of units that are 2 to 4 units that are outside of our typical affordable housing world that serve an incredible need to our communities. And that's where the rental assistance program can really help. These are folks that probably not getting access to a lot of resources. And so that's one of the reasons why we're actually pushing for rental assistance. We do have, I do want to point out, we do have a website where we encourage our partners to go to, where it serves a kind of a clearinghouse of information for COVID-19. It talks about the federal response. It talks about what we're doing locally in certain regions, including the Southeast. And it talks about really and also for tenants and homeowners, what they can do, to help themselves through this process. So, that website is called resilientfutures.enterprisecommunity.org, resilientfutures.enterprisecommunity.org. That is a place where I think could be useful for folks to take a look at. We encourage our partners to go there to see what is going on, take advantage of the programs that are out there.
Mr. Lindsay. Mr. Lindsay, you have a question?
Malcolm, I think you might be on mute.
Okay, we'll go to Ms. Johnson, and then we'll come back to Mr. Lindsay. Ms. Johnson?
Okay, thank you. Thank you for the presentation. I have 2 questions for mortgage holders. One, we know that the federal government-backed loans, there's an opportunity to defer those payments. Is there any talk in the legislation for assistance for mortgage holders of conventional loans? And then 2.
Victor, now you're on mute.
And well, that's okay. And then 2, these loans are deferred. I guess the period is about 4 to 6 months. Is there a plan after that period, if the economy or folks aren't back to work, is there any talk in the CARES Act for those lump sum payments at the end?
Yeah, so I'll tell you what I know on the, let's start with the home ownership and single-family mortgage holders. If your mortgage is enhanced by Fannie Mae or Freddie Mac or HUD, then folks have at least 6 months to forbear their payments and can get another 6 months of forbearance after that, so up to a year forbearance. And what they are allowed to do now is not have to pay that back until they sell their house or refinance. That would offer some significant relief to homeowners that need more time to come back and be able to pay that off. So that's one thing that's happening now. I'm getting a lot of feedback. I don't know if anybody else is.
Okay. Malcolm and Pam, I believe y'all need to mute your line.
Okay, that's better. All right, so that on the single family mortgages, I think there's been, they're trying to address that issue to help people be able to pay off that forbearance amount down the road when they sell the house or refinance. So that's important. On the multifamily side of the ledger, you know, folks will get 3 months of forbearance if they ask for it, and then they have a year to pay it back. And this is for Fannie Mae, Freddie Mac, and FHA. Loans that are outside of those, and that covers probably about 50% of multifamily mortgages in the market, and probably a much higher percentage for affordable, for mortgages on affordable housing. So that is important. They have a year to pay that back. I personally don't think that's enough. I don't think a lot of owners will have enough time, and I do think that they will change that policy moving forward if it becomes a burden on owners. So I don't know if that's helpful or not, but right now that is what the policy is for single family. It's really up to a year forbearance. And then for multifamily, it's 3 months of forbearance to be paid back over a year.
Mr. Lindsay.
Thanks, Councilman Graham. Victor, I have a couple of questions. First, on the topic you were just addressing, has there been discussion about how the tacking on of forbearance payments to the back end of the loan will be handled with respect to the interest charges continuing to accrue on both the interest and principal that's tacked on to the back? In other words, are we going to have people in a situation where they're continuing to pay interest on interest because they've tacked on their payments to the back end of their loan?
That's a really good question, and I honestly don't have an answer to that. I'm not sure if there is clarity on how lenders are moving forward on that, because you make a good point. If it is compounding interest on deferred payments over a long period of time, that is going to be a big burden. Yeah. I do not know the answer to that question, though.
The other question that I had relates more to the secondary market where you probably are actively playing. And I'm in the field every day working with new home buyers who are buying properties right now, and I'm seeing challenges that they're experiencing with new loan underwriting guidelines or more stringent underwriting guidelines. And what I'm hearing is that some of that has to do with the fact that the secondary market is tightening its restrictions on what kind of loans and how many loans that they're willing to purchase to replenish the loan supplies. So my question for you is, are you seeing or hearing anything about where the secondary market's risk tolerance is in this current environment, and how is that impacting on the flow of dollars? And in particular, I'm concerned about programs like our House Charlotte loan program and programs like that, where we need to have that secondary market actively engaged.
Yeah, Mr. Lindsay, my world is focused mostly on multifamily, so I can tell you about the securitized markets for multifamily mortgages. I don't know as much about the single-family mortgages, but I can tell you this. The Federal Reserve's response to the multifamily market has been to buy mortgage-backed securities to keep that market going. I would think that would also help the single-family market. It has helped the multifamily market tremendously. It has kept interest rates. If there's one good thing that's happening in the market now, is that interest rates are incredibly low. And I think that is flowing through the single-family market as well. From a credit perspective, a buyer of a mortgage in the secondary market, they're looking at Fannie Mae and Freddie Mac or FHA to insure that mortgage. So any additional credit requirements, that would actually be coming from Fannie Mae or Freddie Mac or FHA and not from the buyer of the mortgage. So that's where I would look if you really want to know what's kind of pushing credit. It's going to come from those sources, and that's where I would go to first.
Yeah, and Mr. Lindsay, this is Kathy. I can get you some information. I think that, especially in the affordable space, we're trying to make sure that the guidelines are held to the Fannie and Freddie standard. However, I will say that, within the lending institutions, there are different credit appetites that might adjust. But for the most part, I feel that Fannie and Freddie are trying to maintain their credit standards. But I can certainly get you information on how to keep track of that, because it's a valid concern. But as a lender who uses House Charlotte, it's a concern I have as well. But right now we're holding tight.
Thank you.
Ms. Johnson?
Thank you. I have my last question regarding the loan modification or the forbearance. Will that reflect on the individual's credit, that there was a deferred payment?
My understanding is it will not reflect negatively on anybody who asks for the forbearance. That is the message that we are getting from the lenders, meaning Fannie Mae and Freddie Mac and FHA. So there should not be any credit issue for folks that are taking advantage of or using the forbearance program.
This is huge breaking news for affordability. So thank you for sharing this information.
You're welcome.
Thank you very much. We appreciate your presentation. Kathy, next speaker.
Yes, and Deronda, if you would like to introduce your participants for Tara Peel with Social Serve and Catherine Furman Sellers with United Way of Central Carolinas.
Okay, sure. So Catherine Sellers needs no introduction. She's been to this group before, doing great work at United Way. And followed by her would be Tara Peel. Tara is the Executive Director at Social Serve. Both of them are doing a great job for our community. So I'll turn it over to Catherine.
Thank you, Deronda. And I think there's a deck to be presented, I hope. I was asked to come and present on kind of when I came before. I think we were in the very early days of the COVID-19 response fund that the United Way of Central Carolinas and Foundation for the Carolinas had launched. The fund has now raised, as we'll see in a moment, just shy of $20 million. We've made 3 rounds of funding, and I've been asked to kind of present you with an update on where we are with the funding, as well as kind of speak a little bit about how it relates to the work you're doing here with this housing task force. So next slide. As I said previously, we've raised just under $19 million. We've granted out just over $10 million. That does include some funding, and I'm sorry for the typo, it's really 10.46, that 2 is an error. And that includes about $700,000 we've given to arts organizations. That was some restricted funding that had been donated, but the remainder of the balance has been given to health and human service organizations. Next slide. I think you've seen this slide before. In rounds 1 and 2, we gave out $6.4 million. We had 187 applicants, 71 grants. As you can see, the vast majority went to shelter, housing, food security, and emergency financial assistance. Okay, next slide. Since I have visited you before, we've done one additional round of funding. We received 227 applications totaling more than $15 million in requests. We made out 67 grants for under $4 million. Again, we're trying to get the money out very quickly, and so the majority have been 2 and 3 month grant terms. You can see that those initial priorities, the basic needs of emergency financial assistance, shelter, and food security were still very heavily represented, but you do see some additional funding priorities sneak in there. One of them I'll note there is legal advocacy, and we really note that there's going to need to be some direct service advocacy to help people secure the benefits to which they're entitled. I think the previous presenter talked some about what some tenant rights are when a property provider has received CARES funding. We want to make sure that the legal benefits people are entitled to are represented, and so that has been funded through the response fund. Next slide. Okay. One of the things we've also tried to do is do kind of a running needs assessment to make sure that we are targeting our funding to where the greatest needs are, and really understanding how needs are evolving as the pandemic continues to unfold. There have been a variety of needs that are listed here. I will not read them to you, though you're welcome to ask me about any of them. One of the things I wanted to highlight, again, for the purposes of this committee meeting, is one of the lessons we've learned is that it's really a best practice to provide financial counseling along with any emergency financial assistance, and that would include rental assistance that's being provided. We're finding that as people navigate the stimulus money that they've received, the unemployment benefits that either have not come in or are coming in, it's important to provide them with a sounding board to determine how best to use the resources that are available to them and to plan for an uncertain future. All right, next slide. This slide we put together really with the help of the City of Charlotte. I want to say thank you for that. And what we've done is layer over where COVID has been most prevalent, where you see most people living in poverty, households without insurance, and where our Black and brown populations live. And the result is a map that should be distressingly familiar to all of us. It's the same kind of leaving on opportunity map. You get the wedge and the crescent, and it's clear that it's those neighborhoods that are most disinvested, populated by communities of color, that are also being most heavily impacted by the COVID pandemic. Okay. Next slide. All right, we also focused tried to gain a deeper understanding of the unemployment data. We see that women are disproportionately represented in unemployment claims. We also see that people of color are also disproportionately represented. And again, probably not shocking news, but the hospitality industry has been most heavily impacted, followed by trade, transportation, and utilities, and then most recently, education, health, and professional and business services. Okay, next slide. One of the things that we've been tasked with doing coming out of that third round of funding was really taking a look at what we understood to be some of the largest community challenges that could not be met by a single provider or a single application, and see a list of what we've been considering there. The one that is most important for your purposes is the rental assistance, which really falls under the heading of eviction prevention, and making sure that folks who are currently housed remain housed and are not thrown into homelessness. We know that's a huge community issue, and as Ms. Cummings spoke to earlier, United Way, Foundation for the Carolinas, the city and the county have begun very preliminary conversations around how to begin to address that problem. We know that the city has awarded an amount of funding to Charlotte-Mecklenburg Housing Partnership. So the question, I think, for us as a group is to determine how to build a systems approach out of that initial round of funding that can have maximum impact. And so we do have a meeting scheduled next week. I don't know what the answer is yet. I don't know what we'll walk away with yet, but I do know that we are committed to, again, weaving together public and private funding as efficiently as possible to determine how we can have the most impact. With that, let me step out for a moment of my role as a staff member for the United Way and Foundation for the Carolinas COVID-19 Response Fund and step into a different role as chair of the Mecklenburg County Continuum of Care for Homelessness and Housing. The Continuum of Care has established a work group to identify the most pressing gaps in the housing and homelessness system and determine how best to align the various sources of public and private money to address those gaps. The work group is going to begin meeting next week, and Deronda, I believe, has agreed to serve on that work group as well. And we very much appreciate the opportunity for that work group to come and present its findings to the City Housing Task Force and to discuss together what we've learned. You know, preliminarily, I think we know, and again, I don't think this will surprise anyone, there's really two looming issues, and one is homelessness prevention, which is this question of rental assistance that we've been talking about. How do we make sure that everyone who's had difficulty paying rent since March, how do we make sure they don't enter into our homeless system? And that's the work that this group that I mentioned will be meeting to begin to take into consideration. The other big looming question is shelter capacity. And we know that our shelters right now are operating at reduced capacity, and the presence of the healthy and quarantine or the hotels has provided a buffer, but that's not a permanent solution. It will go away. And so the question really is then, how are we as a community going to continue to bolster our shelter system to meet the needs of our population? I don't have an answer to either of these issues, and I know that the hotel work that Tara is going to discuss in a moment will begin to address that shelter capacity issue, but it's not a full solution. And so as we work to develop that solution, my hope and the Mecklenburg County COC's hope is that we can all work together collaboratively. Housing and homelessness do operate as a system, and we must develop a systemic response. And I would urge us to have, as we do that, and I know that this committee will be, will welcome that approach, but we have to work with an explicit focus on racial equity to ensure that the solutions we develop now do not reinforce some of the disparities that exist within our current system. So I hope that we can work together, both city and county and private funding together, to find the best solution for our community. And I think that's my presentation. I don't think there's another slide other than a thank you.
Thank you for that presentation, and open it up for questions and answers. Questions? No questions. You did a very good job.
All right, thank you.
Okay, Connie, last speaker.
So our last speaker is, this is Deronda, sorry. Our last speaker is Tara Peel. Tara is Executive Director of Social Serve, and she's going to speak to us about how Social Serve is really helping this community as far as eviction prevention.
Welcome, Tara.
Thank you. Hopefully I'm not on mute. Thank you. I'm here today to specifically focus on the hotel triage program that we're assisting with, along with numerous other agencies, including Salvation Army. We're working closely with the county on this and with, again, support from numerous agencies. The purpose of the hotel triage program is to help prevent households and hotels from ending up in shelters. Our role in this, we are only one piece in this program. Crisis Assistance Ministries also helps with a significant number of households in these hotels. But we, when households are referred to us, can pay for either two-week extensions to their hotel stay or a 1-week extension plus some of the arrears that they may owe. We can also offer housing search assistance to those households that do have income and the ability to secure permanent housing. And when they do, we're able to help with upfront housing costs, and those types of costs are the security deposit, first month's rent, application fees, or utility deposits. In order to be eligible, typically what happens is that a household calls 211 because they are in a hotel and unable to pay for their extension, and they're worried about losing their stay there. They are put through coordinated entry at the county level and referred to a case manager. So they're assigned to a case manager in one of the numerous agencies, including Salvation Army that I mentioned, and those case managers determine whether they need assistance from Social Serve. When they refer to us, they have to be determined to be 200% of poverty line or less, staying in a hotel, and when they moved in, they had income, but they have since lost their income or their income has been reduced. In order to get assistance from us, they also have to have a workable plan, basically to get repeat assistance from us. Just a little bit on the statistics here. We have had 221 referrals so far, and we've only been working on this since the end of April. At least 100 of those households do have children living in the hotel rooms with them. We've been able to provide 153 extensions to date, and that has been about $130,000, which is about an average of $850 per household. We have recently started to see, now that we've been working on this a little over a month, we have been recently seeing repeat referrals. People's income situation has not changed. We are also able to assist some of those households with housing searches and upfront housing costs, as I mentioned before. To date, we've spent $33,000 helping people secure permanent housing. Has assisted 26 households. Some of those households are exiting hotels. Others of those households are in shelters, and we're moving them into permanent housing using the same COVID relief funds. And that's to, again, prevent the shelter system from becoming overwhelmed. To speak briefly on the magnitude of the problem, I mentioned that we had received 221 referrals in about 1.5 months. That is only the referrals that social service received. Again, crisis assistance is also assisting households, and there are many, many households living in these hotels who have not yet sought out assistance. We have found that the most frequent reasons for people being stuck in these hotels are, of course, that they've lost income, but also, even if they do have some income, they may have an eviction on their record. That means that housing providers are unwilling to accept them, especially if they have eviction debt. Some households report having a criminal record, and some, very few, have a housing choice voucher but can't find a landlord to accept that voucher. And finally, there's also a large contingent of households that simply are paying so much in hotel rates that they're unable to save for the upfront housing costs in order to move into permanent rental housing. We have assisted households at 35 different hotel chains so far. Many of those chains have numerous locations. So this is a pretty widespread problem across many of the hotels. And again, I suspect I'm only reporting on a tip of the iceberg.
Thanks, Tara.
Thank you, Tara. And I'll open up the floor for questions from the task force members. I think we saw Lee?
Yeah, I apologize if this question kind of goes back a speaker. I was a little late getting my hand up, but, and it may also be a Pam question. A little bit of understanding with the additional funds that the city is expending for rental assistance and mortgage relief assistance. Is that fund, who's kind of managing? Isn't United Way also managing those funds? And with those additional funds, kind of is effectively any rental property now eligible to get rental assistance through either the funds United Way is raising privately or the city funds? How are those effectively, those two programs working together?
Great. So Lee, thank you for that question. So I'll remind us that the council approved that funding Monday night before last, so 2 Monday nights ago. When the council approved that funding, one of the things we discussed a lot is that we wanted to develop a systemic approach or systems approach to use that funding. So we, I think Catherine referred to, we want to work with our partners, the United Way, Foundation for the Carolinas, all those people that she named, so that we can do just that. We can spread it across a broader group of people for existence, broader kind of non-market apartment owners and landlords to help with that. So we have not, we're going to be meeting next week to begin to figure out what that looks like. It is not managed by the United Way. We will build on the existing infrastructure that we have with the partnership, but we do want to leverage everybody's knowledge and everybody's funding in order to maximize our funding. So I hope that answers your question.
It does, and I apologize, you're right. You reminded me that I think United Way has funded the partnership. So in essence, you're dual funding, you're both funding, you could potentially both be funding through expanding the program by using the partnership, but I think United Way is also funding the partnership in that same.
That's right. United Way funded them, and Catherine, correct me if I'm wrong, in their early round of funding.
Yes, we funded Social Serve in partnership with Charlotte-Mecklenburg Housing Partnership for a project that's different from the one Tara was discussing just now, but it was providing emergency rental assistance to a targeted number of properties, the tenants in a targeted number of properties. We want to see, with the city, how we can build upon that successful pilot to expand out to other properties, but lots of details remain to be decided about how best to braid together public and private funding, and then, as Pam said, what criteria we've used. All of that is to be determined.
Mr. Lindsay.
Thanks, Councilman Graham. A couple of questions for Tara. One, are you able to track, do you have any idea what amount of your support funding goes to security deposits, utility deposits, those kinds of upfront costs when we move people into permanent rentals? That's one. And then secondly, you talked about some of the barriers that some of the folks who are in hotels are experiencing, and you mentioned criminal backgrounds. I'd like to know if you have had any opportunity to be able to kind of gauge, what sort of impact those particular barriers are having on people. And the reason for the question, there's a big push around housing reentry that we need to be looking at in terms of how we are able to help people find additional housing. And criminal background is one of those big problems that has been a hindrance. I've been a property manager before. I understand how landlords look at that. So we know there's a lot of energy around how do we sort of create a more of an appetite for accepting those residents who might have some type of criminal background. So we're going to come back to that a lot more, but I'm interested in learning more about any data that you all are able to collect, or for that matter, anybody who's working on this issue might be able to collect with respect to those folks who are in these triage situations, particularly, but also something for us to be looking at as we go forward. So first question again was, any idea about how much of what the support you're providing goes towards security deposits, utility deposits? And then secondly, if we can get some input or some data around which of these barriers are really preventing people from accessing available housing, criminal backgrounds being my primary interest right now.
So I luckily have some answers to that. We do very closely track what we're spending to everyone so that we can report on it. But back of the envelope it's about $1,200 per household we assist in securing housing. Goes toward paying upfront housing costs, which we consider to be the first month's rent, security deposit, utility deposits, which are very small. But the big ones are the security and utility deposits. I do track all of that separately, so I can get you specifics on utility versus security versus first month's rent. But I will tell you that, first month's rent is easy, but security deposits tend to increase based on the background issues that a person may bring to the table. So we do see some only have to pay 1 month for security deposit. Others have to pay 2 months up front for security deposit. We have also had to pay sometimes what we call a signing bonus. We pay that when a person has a pattern or an eviction in their background, and we're basically trying to convince the property provider that they should give this person a chance. And so we do sometimes have to sweeten the deal. We do have other sources besides the COVID relief fund that we leverage in those situations. Utility deposits are really just $200, right? It's a negligible amount. For your question about criminal backgrounds, absolutely that's a barrier to housing. However, the program that we run that helps people find housing, which is called Housing CLT, it's been in operation for over 3 years now, and it's city supported at this time. 70% of the households that we help get into housing have a criminal background under that program. That means that we are successful in convincing property providers to accept those households. What that takes is leading with the person's story and what has been put into place since the incident occurred. That doesn't always work, so sometimes it's a double security deposit and a signing bonus. I will say that we've had tremendous success in the last few months in getting people housed, and I can't overstate the importance of the COVID relief funds and the other upfront housing cost assistance funds we've been able to bring to bear to make that happen. Money really does get people into housing, regardless of backgrounds. So criminal backgrounds are an issue for sure, but I would say eviction debt is just a non-starter. And a lot of people end up in hotels because of eviction debt or end up in shelters because of eviction debt and get stuck there. Paying down eviction debt, and sometimes it is less than $1,000, gets people into housing.
If, Mr. Lindsay, if I could, I'd like to speak to the data. The county does have data about some of the barriers for those families in the hotel.
Great. I think it's important for us to get access to that and kind of understand how that segments and whether or not we're able to attack any of those particular segments in ways that would facilitate this process. The other thing I'd like to throw out for some consideration, and I may be a little bit ahead of myself, but the idea of setting up some type of agency guarantor for security deposits and perhaps utility deposits, where the agencies are the guarantor for those things. So instead of putting out $1,200 for that deposit, then maybe a guarantee from that agency would suffice for that purpose, and then that money would still be available for later use to assist more families. If you got on an average $1,200 per household going out and security deposits and utility deposits, that's enough to get another family into a unit. So I just throw that out as something to be explored, and whether or not we have the ability, and perhaps that guarantor in this case could be the city. That's why I'm asking this question at this point, is what ability would the city have to play that role as an agency guarantor, or even the nonprofits that are now providing that assistance? Are they in a position to do that? And what would it take for us to be able to implement a program like that if there's an economic benefit to doing it? So I just offer that as a suggestion.
Thank you, Mr. Lindsay. Ms. Graham.
Thank you. Tara, thanks for that presentation. Thanks for you guys at Social Serve taking on this task. I know that this is a little bit of a pivot for the work that you do, even with the Housing CLT program. I am curious to know if you collected any data around what the average area median income has been for those households that you've assisted with the funding that you received. And then also, I know you mentioned that you've had some repeaters who have had to come back for assistance. Is there any cap at all on funding assistance through the program? And if so, what is that? And then this question may be a little bit outside of your scope, so if it is, just let me know. But do you guys have a sense of or forecast as to what you think will be the need? We see the need is probably increasing because we know that stimulus money is waning, other funds are waning, some people still waiting for unemployment checks and the like. But have you done any forecasting around what the need will be for rent relief based on what you've seen in terms of assistance that you've provided? I think those numbers could be very helpful for our task force and this work group.
So I'll start with Mr. Lindsay's question and then Kim's questions, if that's okay. I think quickly what Mr. Lindsay was referencing, we refer to as a risk mitigation fund. And it's certainly something that we found to be very effective in getting property providers to sign on to our program to help house people who are homeless. It's basically an insurance policy. We had not been including security deposits in that figure because we did not want to ask property providers to treat tenants any differently that we refer than others. However, that is a possibility to include that. Basically, the very existence of that insurance policy is helpful in getting landlords to sign on because it promises to help reimburse some of costs they may incur if one of the households that we refer causes expenses in excess of the security deposit. For Kim's questions, on the social serve side for the hotel triage program, we have not been collecting income information, but I'm pretty certain that the agencies that refer to us do. That information is likely in HMIS, which we don't currently utilize but are working to get into soon. So I think Deronda may be able to confirm that. As far as repeat households, we do have limits. I wouldn't say there's a dollar figure limit because every hotel charges a different rate and every household is in a unique situation. We typically limit to 2 extensions or 2 extensions plus housing cost assistance because it's certainly more affordable all around for a person to move into permanent housing than to stay in a situation where they're continuing to be stuck in a hotel and utilizing services. If we have to pay arrears to a hotel in order for them to do an extension, we limit it to 1 2-week extension plus some of the arrears up to $1,500. We have discussions every week with the other agencies collaborating on this project to determine what are the exceptions to that rule, because if people are actively seeking housing, making applications, especially if they're working with social service to do that, and we know that they're doing that, we don't want them to lose their hotel just because they're waiting for their move-in date. So, and there are cases where we may be able to extend again. You also asked about forecasting the need. We've been working on these dual projects with the hotel triage program for only a month and a half. And with the rental assistance program that we're working with Charlotte-Mecklenburg Housing Partnership on for 2 months. I certainly have access to data to see how many households have asked twice, and I can put that together for you. But in terms of forecasting, I would say the need is going to increase because the stimulus checks will have been spent. And I think that's evident by the fact that rent's not late yet in June, and we've already received over 100 applications for the rent assistance program that we're operating with Charlotte-Mecklenburg Housing Partnership with no advertising this month.
Ms. Johnson.
Yes, thank you. Thank you, Tara, for that information. This is great information regarding the hotel and the reason that individuals are in those hotels and motels. I have 2 questions. Are your case managers currently working with our city's mediation department to mediate the outstanding balances that are due to the hotels and also the outstanding eviction debt? One of the things you said was that an eviction or record or eviction debt is a non-starter for many individuals. And we know that if an eviction is on the record, that's going to create additional barriers. So this is an opportunity to marry these 2 services. And we're really pushing the mediation through the city. And I wanted to know if that's a service you're currently utilizing, because it may be able to leverage the dollars that you're able to spend by paying less.
So, Ms. Johnson, I will say that we don't, our staff focus on just the housing navigation aspect and the payments. Deronda's staff and many other homeless service agencies, they provide the case management. And I would love to learn more about the mediation that's available so that I can bring that back to the eviction prevention group and we can talk about how better to utilize that.
Okay. It's a great opportunity to reduce evictions in our community. So we can get together, or Deronda can share the information with you, but it is something that we talked about last week, and I know we'd be happy to share information. Secondly, as far as utility bills, I know that Duke Energy is deferring payments, that at some point those payments are going to be due. Is there any communication with Duke Energy, or do we have any information on what's going to happen with those payments? because as of now, according to my understanding, Duke Energy does not set like budget payments or fixed payments for individuals who have late payment history. So what is the plan to become whole again for individuals with outstanding utility bills?
I can, Councilwoman Johnson, I know that Crisis Assistance Ministries are doing a lot to help people with utilities. I have some packages in my office now where people can actually go and put it in the bin, and individual clients, so you don't even have to go through that referral process, but they've really stepped it up a great deal with paying utility bills.
Okay.
There may be some other things going on, but I know that one is going on.
Thank you.
Mr. Winston.
Yes, I wanted to touch base about the utility issue that was raised. I think it's a great point. I know it's an issue that we're trying to deal with in the Brook Hill situation. We know in order to keep folks in there, if we're able to figure everything out, that we're going to have to deal with some utility stuff. So I'm wondering if this isn't a position, as opposed to trying to figure out how to set up a program where we use very limited funds. I wonder if this is a place where we use the power of convening that the city has to bring the utilities to the table. Duke Energy, Piedmont, maybe the Business Alliance. A lot of the business community has, outside of just the COVID discussion, so they've done a lot of yeoman's work around that, but they've made commitments to help with these equity issues wherever they can. So as it relates to eviction fees and those kind of past due things, wondering if we can't bring them into this discussion to talk about, one, how do we unwind, as Ms. Johnson mentioned, how do we unwind these fee deferrals, but also how do we kind of look at, what they can do on their side in the name of equity to get people housed. The other responsibility that we have to remember that we have here, while we are need to find solutions for the folks of Charlotte, we are a big dog on the block. So if we can push out ideas that will have effects around the region and can be repeated in different places, it's even more powerful. So I think this might be a place, if we can bring Duke and Piedmont to the table to see if they, and hold them and push them to be good partners in figuring this out.
Duly noted. Okay. Tara?
I put my hand down. Question answered.
Okay. Well, thank you very much, Victor, Catherine, and Tara, for your presentations. Tara, I hear a lot of good things about the work that you guys are doing at Social Serve, and I just really want to thank you for kind of being on the front lines out there, working with families, and as well as your everyday mission of what you do. So thank you very much for what you do. United Way is doing a great job. Thank you for the presentations, everyone, and we will move to our next agenda item. Just want to make mention, I think everybody's probably seen it over the weekend, that the governor, as well as the Chief Justice, extended the moratorium on evictions, as well as the courts reopening until June 21st. So it does give staff about 2 more weeks to kind of put programs in place and do those type of meetings that Mr. Winston mentioned in terms of talk to other stakeholders in the community as we prepare for a reopening later this month. So just want to make sure that all the task force members were aware of that. And then lastly, earlier in the presentation, there was a request made to delete item number 2C, which was to create a rent relief working group, noting that would be redundancy in the community. So I don't think a vote is necessary. If there's consensus around the table that's okay, that we just withdraw that from the task force working group, unless I hear any objections. Ms. Graham?
I know we're going to get to lead updates, but I do have a specific request for the city, and it really dovetails with what you just mentioned about the courts being delayed with the eviction moratorium extension. I've reached out to the city's dispute resolution program leadership and asked them kind of what they've been seeing in terms of folks reaching out for mediation referrals. And they said it's been lower than they expected with the eviction moratorium extension. I know we talked before about marketing assistance from the city. I think it would be very helpful for them to receive assistance, whether that is advertisement on CATS buses or whether that's a big sign on the side of the jury parking deck. We need to get the word out as much as possible so that renters can have assistance as well as rental owners, because the numbers should be higher than what they're seeing right now, considering it's June the 4th.
Note well taken, and I will own that request from you, Kim, to ensure that we get with corporate communications and the city manager to see what type of help and support we can get in terms of getting the word out, as well as making sure that community relations has the resources to really do a more than a credible job in mediating and having the tools that they need to do the job. So duly noted.
Thank you. I appreciate that.
Okay. So not hearing any objection about removing item 2C, we will remove that from the financial assistance working agenda. We thank the leads for their report today, and I think that we'll go straight into lead updates. I think Kim Graham just made one. Are there any other leads who would like to just kind of give us a brief 30-second commercial in terms of where they're at and their preparations for presentation?
This is Deronda. Very briefly, you heard from Catherine, who is the CLC chair today, and Tara, who works with the CLC. We have created a committee that will be working on this eviction issue. We'll be meeting weekly to strategically plan with the goal of trying to lessen the impact on our homeless system. And if anyone has any feedback or would ever like to join us on that group, just please let me know. Thank you.
Thank you, Deronda. Any other leads would like to kind of let us know what's happening with their assignments? If not, okay. So we will move forward next week with more information from financial assistance. Staff will be working with them over the next week in preparation for next week's meeting. I do want to thank everyone. I know 2 hours every week on a Thursday is a really big commitment, so it does not go unnoticed. And I really want to thank everyone for your participation. The volume of work that we're getting done is tremendous. I do want to remind you that there is a Dropbox with information in it, so I'd encourage the members to go to the Dropbox and read the deposited information in there for your review and consideration as we move forward with the work of the task force. Great meeting today, great updates, great public testimony. We'll pivot back to financial assistance next week, and we will follow the working plan as outlined. Thanks everyone for coming today. Thank the viewing public for keeping an eye on us. May God bless you all. Stay safe. There's still a COVID-19 public health crisis out there, so I encourage the community to stay safe. I always also encourage the community to push back and protest peacefully. We are a democracy, and that's encouraged. So exercise your constitutional right. And this meeting is adjourned. Thank you.